first home buyers sitting between 650 to 1.5 have just won the lotto. We're going to unpack what's happened with recent government changes and talk with famous broker Zach about how that's changing in the last couple of weeks since it was introduced. Stay tuned.
Hey, stamp duty. Woohoo!
Yes, it's a win. It's official.
I think this is the first time stamp duty's ever been celebrated. Could I be right?
Yeah, look, absolutely. It's been a very, very sensitive topic to touch. People didn't want to touch it because they thought they may break it. It was introduced way back in the 80s. The thresholds were introduced, which was interesting because when the thresholds were introduced, they were saying lower value properties, lower stamp duty, medium value properties, medium stamp duty, high value properties, we're going to whack you at this percentage. But what actually happened very cleverly is as time passed on, every single price range moved into the premium stamp duty percentile. And government was very happy with filling their coffers.
Yeah, they've done well, but there's been a big change.
Yeah, they seem to be opening up the floodgates for people and their opportunity to get into the market.
Exactly. Can I qualify you? You are a fantastic mortgage broker in DUI, working for an incredible mortgage broking company called Shaw, and you are at the coalface of lending. Did you see the change in stamp duty coming? Could you feel it, or did it just happen like that?
It was proposed. It was one of the policies that were proposed, and since the new government got in, it was tabled and it's passed both houses now, and it'll be in effect as of 16th of January.
So go around quickly.
Which is pretty incredible. But you can enjoy it now. 2 weekends ago, last Saturday. Yeah, don't have to wait.
So you can pretty much enjoy it now in a sense that you can get your refunds following the 16th of January. So you will have to pay it if you settle beforehand. But I mean, a lot of people are out there negotiating for that settlement to be on the 16th of January or after. It is just around the corner. We're almost at the end of the year, and it's only 2 weeks into next year that it takes full effect.
So tell me, the last 2 weeks, it was introduced 2 Saturdays ago. The last 2 weeks, with the loans you're writing, with the loans Shaw are writing, anything to report there from what's been happening with these first homies and their deposits?
Well, there's obviously a lot of interest and excitement in having an extra chunk in your deposit, which would have been contributed to stamp duty.
Yeah.
We're answering a lot of questions at the moment about, how banks are treating the annual land tax payment in serviceability and when people can actually receive that money back.
I never thought of that.
Yeah, so on that first part, the banks haven't really released any updates to their serviceability calculators just yet. But
get in fast.
Get in fast.
Yeah, do you think there's a little window of opportunity there?
Oh, look, the window's open and it's not going to shut because it's a brand new policy and it's yet to take full effect. But everyone's getting the benefit of it now, and I suppose it's the same for an investment property, right? So if you've got an investment property, you also benefit from being able to opt in for that land tax on the unimproved value of an investment or an owner-occupied property. It changes slightly. The owner-occupied is $400 and 0.3% of the unimproved land value, and the investment amount is $1,500 plus 1.1% of the unimproved land value, where traditionally stamp duty is on the purchase price. So you get not only the unimproved land value, but the improvements in that purchase price, which you pay stamps on. So it's quite a big big move for people looking to get into the market. And as Luke said, especially for people in the $1 million range.
Yeah.
All right, so just to unpack a little bit very quickly for the starters, stamp duty has to be paid when you buy a property. It was sitting circa 4%. First home buyers were paying stamp duty, were due to pay stamp duty, but they were given an exemption if it was under 650. Zero stamp duty under 650. Then what happened was the government said, we're going to prorata that, and we're going to make you pay full stamp duty if you pay over 800,000, because if it's over 800,000, we reckon you got enough money that you can pay stamp duty. So, for instance, if you were halfway between 650 and 800, you're paying half of the stamp duty.
Yep.
Now the government's come along and said, hey, we're going to give all you guys another option. Having said that, what they've done, under 650 people are preserved. They're still going to pay no stamp duty. They're not going to opt as pay-as-you-go stamp duty. You don't have to have rocks in your head. But there were people out there that just lived in, for instance, expensive parts of Sydney. They were genuine first home buyers, but the property market genuinely didn't offer anything under 650. So they were due to pay stamp duty. This is reprieve for those guys.
Yeah, absolutely. And I think in that $1 million price range alone, the upfront stamp duty on a $1 million property at the moment is around $40,000, whereas under the new annual land tax model, 10 years of the annual land tax would amount to less than half of that amount. So 10 years
That's awesome.
would amount to $19,880 or thereabouts, whereas your upfront stamp duty would be $40,000. So per annum on the land tax, it's $2,200,
which is amazing. So I think we were saying off air, a lot of people now have the opportunity to potentially get into a home that is a good start, and then we'll catapult them into the sort of the next category once they've sold up in 10 years or so. They've got 10 years of capital growth to enjoy, and then move on. Yeah,
absolutely. There's a massive break-even point. So as I just explained, 10 years on annual land tax doesn't get you to half of what the upfront stamps would be. So it's more flexible depending on people's situation. And I don't know if you can quote an average ownership stat, Mark, but last I checked, it was around that 10, 11 years that a majority of people tend to move houses. Is that still the case?
It used to be 7 to 8, but it became quite crippling with how much stamp duty was involved to make the transaction and agents' fees. And what people didn't realise is when you were churning 4%, because that's what you paid on stamp duty, and you were churning 2% because that's what you're paying on your agent's selling fees, that's 6% you've churned on the way out of that property. So you've paid your stamp duty of 6% to get out of that place. You've paid your 2% commission to get out of that place. You're not paying an agent to get into the new place, but you're paying stamp duty to get into the new place. So you were chewing up about 10% of your cash. When I say cash, it's 10% of the whole property value. But then if you only had 30% of the property in that you had in equity, that was almost 30% in transactionals you're wiping out to get out and get into the new one. So it's actually completely changed that game. It could potentially halve, your transactional cost if you're paying that pay-as-you-go stamp duty as a first home buyer.
Yeah, it's big. So I think the main people that are going to win here is anyone buying property upwards of 650. Because obviously if you're under that, then you're still getting the full exemption, which is great. And then up to 1.5 million.
Yeah, that's right. And I think, look, every scenario is going to be different. Even if you're still buying at, $800,000, $900,000, I think the cap will remain at $900,000 for the stamp duty concessions. It depends on how long you intend on staying in that property, whether it is owner or investment. Because someone buying for $850,000 but looking to move on in 5 years, or thinking about that, would be better off going down the annual land tax route rather than paying the upfront stamp duty of around $35,000.
Can I ask, are the people you're writing loans for, are they trying to get more money now that they've got a bigger deposit?
Oh, look, everyone wants what they want, and at the moment with the rate rises, borrowing capacity is going the other way. So, try not to be the bearer of bad news, but it is what it is. A lot of people don't max out their capacity though. They are smart in a sense. They're not going to extend themselves that much, and they do have significant deposits saved up. But
we hear that quite a lot.
Yeah,
people at open homes saying, I can borrow 1.2, but I only want to spend $1 million.
Yeah, that's right. And I mean, they might have been ready with a larger deposit, and they're in that position where they don't have to borrow as much as their maximum capacity allows. And some people are choosing to wait with the confidence that they've got some money and they're not at their maximum capacity, and they've understood where the rate rise is going. But again, you can't pick the bottom of the market, and things have come back so much, and people are in their best position now. So if more rate rises happen, your borrowing capacity isn't going to improve. So it's never a better time to move, in my opinion.
It's a sweet spot, that's for sure. Yeah. And interesting.
I guess there's an axis. I guess there's a bit of an axis there where property values have come down far, as far as they can go. And then there's your lending of getting a loan on the interest rate is probably as high as it's going to be. And you sort of want to nail it on that crossover. If you wait too long, you simply won't get the loan. If you buy too fast, well, the property value could have gone down. So there's probably a little bit of an axis that people are trying to work out in their brains.
Exactly.
So. And it's definitely not a coincidence, since this was introduced 2 weekends ago, our open home numbers have gone through the roof, and particularly the entry-level stock. There's been some really great conversations, properties sitting around 600,000-700,000. People are very excited.
Well, you guys had 40-odd groups through that Kingsway apartment, is that right?
And that's sitting just shy of 1 million. There's some big numbers out there.
Now, for people that are outside of, we're probably blessed to be in some pretty good suburbs, northern beaches of Sydney. But let's talk about the western suburbs. There's genuinely a lot of families that had absolutely no interest in a 1-bedroom apartment or even a 2-bedroom apartment because they just simply couldn't fit in. A dad with a couple of jobs, a mum with a couple of jobs, a couple of kids, and they just weren't eligible to get into something. I'm talking about suburbs, probably even further out than Kellyville. But these guys can now get into a house and land package, like something that's built that may be circa 850, 800, which looks pretty good because they're working hard, they got some good income coming in, but they didn't fit. Now they fit.
Yeah, it's a massive opportunity, and it broadens the market for who's actually going to be transacting on property, I think. So I think, if it's not already happening Sydney-wide at the moment, it definitely will, over the rest of the summer season, more people coming into the market, more buyers.
There's a heap of buyers at the moment, and they're all, looking at the same property. There's not a lot of stock.
So when we were off air, did we miss anything, guys?
Pardon, say again?
When we were off air, we brought up some pretty hot topics on this stamp duty lotto. Have we missed any of these things that we can bring up that we'll talk about off air?
Oh, look, I can share some of the figures, just how it balances out in the break-even years in terms of the different purchase prices, market values by comparison. So I quoted the $1 million figure before, the upfront stamps being 40 grand, whereas the annual land tax in year one being 2,200, and then balancing that out over 10 years, it doesn't get you to sort of half the upfront stamp. So you're still in saving all the way up until year 23, 24 in that same property if it's your first home. And and it just goes up from there. For $1.25 million property, stamp duty on that up front is around $53,000, whereas the annual land tax starting at $2,600, and you're still at 20 years. You haven't reached that upfront stamp duty amount if you're under the land tax annual payment. So it's a 26-year break even, and then there's a 29 or between 29 and 30-year break even for a $1.5 million house or a townhouse at 36 years. So it's pretty staggering how much people can benefit, especially increasing up to that price bracket of $1.5 million.
Yeah. Is this just New South Wales or nationwide?
New South Wales has brought it in at the moment. I can't comment for sure on what's happening in other states at this point in time, but yeah, it's as of the 16th of January 2023 for this state. The rebates, you can get a rebate from now until then, and then you can opt in or out.
Yeah, right.
And it's only for that person on that property, unless of course there's someone else who is a first home buyer, and that's a policy that's still in place 5-10 years down the track. But it is only for first home buyers.
So in terms of eligibility, I believe it's the same as what you would be applying for with the 650 grand.
Yeah, that's right. So you can't have owned anything previously. You have to be Australian citizen or PR, or at least one of the buyers do.
Yeah.
It can be established or new.
Yeah.
Investment or owner op. If it's you have to move in there within the first 12 months. You obviously have to be over 18. So same eligibility requirements as what's been around in the first home buyer scheme for quite some time. It has just opened up that bracket. So the cap got increased this year to $900,000 for stamp duty concessions, but now you do have that incentive to look at properties up to $1.5 million.
Big win, massive win. So yeah, I think the takeaway from this is people that would had a portion of their deposit for stamp duty can now contribute that in full towards putting it down, and then opting in for a smaller land tax.
Yeah, that's right. Mark's at the car wash.
We're going through, boys. We're going through. We're going through. Watch out. All right, that's awesome.
Open the window again.
Yeah, no, I won't do that again. That was a shock. I didn't realise how much water gets pumped through this place. Jesus, it's like a fire hydrant. But Zachary, male model of the mortgage industry, thank you so much. Hopefully we help people today. Peeps, look Zach up if you need a loan. You will help people with a loan anywhere in New South Wales, yeah?
Exactly right. Yeah, reach out. My details are with the Novak guys. I'll be on this podcast, and I'll share my details once this is online.
Beautiful. Yeah. Congratulations to the government for having the balls to push this through.
I think it's big. It's exciting. Yeah. Cheers, government. It's about time you did something for the first home buyers.
It's good, eh? It's good.
Yeah. Yeah. Anything else to add?
Oh, no, get your car washed today, everyone.
I think champagne sales will be going through the roof. Extra bottles to pop with that extra dose of funds.
True that. Certainly have a few more.
That's huge. It's huge.
Thanks, Mark.
Awesome.
Thanks.
Take care. Thanks, guys.
Cheers.
See ya. Bye.